Okay guys, welcome back to the channel. Today, a little bit of a different Q&A. We're just going to fire off some quickfire questions. Rather than having 4 or 5 minute responses, we're going to go 30 seconds to a minute, and hopefully you guys get some quick and concise answers to the questions which you've been wondering the most. This one's quite difficult because it obviously depends on your trade style, whether you're a scalper, swing trader, and how much you actually trade. In myself, I only trade a couple times a month, so my months average like 5, 6, 7%. So in a year, I'd be aiming around 50, 60, maybe 70% profit. But if you are someone that trades every single day, then you can make 10%, 20% in a month. It's not going to happen every single month because if you trade more, you're exposing yourself to more risk. But you can definitely have those bigger months if you are trading more and obviously risking 20% in a month instead of if I'm only risking 3 or 4% in a month. So backtest and then see how much you would make in a whole year of testing to then see what you can actually expect from your own results in your live trading as well. But you shouldn't go into a year expecting to make a certain amount, or if you don't make a certain amount, being disappointed, because you never know what's going to happen. You never know how you're actually going to trade, so just be expected for anything. When you're picking a prop firm, you just have to look at, do they fit your trading style? So I could recommend one, but it doesn't actually fit your trading style. Maybe it doesn't allow news trading or holding over weekends, but that's the trading you do. So there's not really one for all. But if I had to pick one, it would probably be FTMO, simply because they've been around the longest. They're going into actual prop trading, with the purchase of Quant Lane. So I feel like in the long run, they're just the best to go with. They have never had any issues. I've personally never had any issues with payouts from them. If you're going more like a cheaper version, I would say True Forex funds. Very, very tight spreads and quite easy to use. Those are kind of the top 2 which I've actually used in the past. When you're choosing your risk, you actually have to take into account your win rate and your risk to reward. Because if your win rate is very, very high, then you can kind of allow yourself more risk on the average trade, because you know that you're not really going to lose many trades. And if you have a lower win rate, you're using 2, 3, 4, 5% risk. You could be crazy. 5% risk. If you lose 10 trades in a row, the whole account is halved in size. So if you're using 1% risk, you're then only down 10%. So you just need to be careful with your win rate and your risk. Personally, I'll always stick to 1 to 2%, depending on the account I'm trading. If it's a prop firm, 1%. If it's a personal account, 2%. I used to trade the 5-minute time frame, and I just used to use the 15-minute, the hour, and the 4-hour. So I'd use the 4-hour to see, okay, is it bullish, is it bearish? And then I go down to the hour to look at like key levels. Then 15 minutes, I don't even know why I use 15 minutes, but then 5 for entries. Whereas now I simply just use the 15 minutes because I can do everything on that time frame. I wouldn't go down to the 5 for entries because I feel like you can see everything on the 15 minutes that you would be able to see on the 5 anyway. It's kind of a one for all time frame. You can do your trend analysis. If you see a break of structure, you can trade that. You also get your entries. You also get everything on this one time frame. So I'm not going to recommend a different time frame if I don't actually use it myself. Outside of trading, I do partake in a bit of golf. So, hitting those fairways, 300 plus yards, you know how it goes. Also a bit of tennis. Got some practice with Andy Murray next week, so that's going to be good fun. I'm also a fan of MMA. So if you guys want to fight, let me know and I'll come and show you how it's done in the charts and in the octagon. But yeah, a few different activities which I actually like outside of trading. Also, I love watching a bit of F1. Investments. So one thing is watches. We've got the nice little Batman on here. Also, I like investing in index funds, obviously, and other businesses. So businesses that I know in the future will make me money. It's fine putting money into a stock, a crypto and everything like that, but they can only grow a certain amount. If you're looking at the returns of the S&P 500, averages 7% a year. I'm not really happy with 7% a year. Especially as a trader, 7% a year, I'm not even going to get out of bed for that. Let's just say that. So if I put that money into other businesses outside of trading, they're going to bring me passive income in the future. That's kind of what I'm focused on doing currently. See, this one can be quite tricky because if you've set a session or a certain time period to actually trade during, you're going to have issues with trades being active past this time. The reason you've actually set that time period is so you're not staring at the charts, focusing on entering trades outside of those hours. However, if you're actually in a trade, I feel like it is fine to hold. Unless there is a specific reason why you don't trade in that next session, then I feel like if the trade is still valid, it hasn't broken structure to the opposite direction, then I just feel like you might as well hold the trade out. Let's say you're 10 pips from take profit, just hold the trade. I only usually close trades with stop loss or take profit. So that's kind of why I hold through these extra sessions. See, this one's tricky because it's average trades per month or average setups per month. Average trades per month could be 3 to 4 trades, but on these trades, I actually scale in. So I've talked about it previously on my prop firm videos and how I actually pass these prop firms, where I'll enter whilst in drawdown. Sounds stupid, but it works perfectly. You add a 0.25% risk extra to double the risk to reward. So if I'm doing this on every single trade and then scaling in profit once you've broken structure, just a continuation of the original setup, then it will be like 3 to 4 trades per setup. But setup wise, I'm only usually taking 2 or 3 per month. But it obviously adds up with all the scale-ins on your wins and your losses in total for the month. See, personally, I'll only compound personal accounts because funded accounts, we've seen what's happened with firms in the past, like My Forex funds, Funding Talent, these sort of companies. If you leave your profit in with the account and your money in their hands, anything could happen. They could shut down. They could say, oh, we can't actually pay you. We don't have the funds. And then you're not going to get paid. Whereas if you take the profit out as soon as you can, so let's say in 7 days you can get a withdrawal from FTMO, take that withdrawal. Obviously you can compound the account, keep the money in there, and it's just free money growing, but it's only your money once you actually withdraw it. Any profit which you're actually compounding is only demo money. So you're not actually making any money until you withdraw the money from the account. And then just use this to compound your personal account. If you're doing this alongside each other, then you can just make so much profit in the long run anyway. And you get to keep 100% of it at the end of the trading month or the trading period, which you would usually withdraw anyway on a prop firm. Tracking performance is a must. If you're not tracking your performance, if you're not tracking your trades, your losses specifically, then how do you expect to actually increase your win rate, your profitability, and how you actually see the markets better? Because if you're just doing the same thing over and over again, how do you expect to improve? If you're not noticing the mistakes you're making, if you're not noticing, oh, maybe Mondays aren't actually as profitable for me as Tuesdays, just take out Mondays. I wasn't trading very well on Mondays. I actually made no profit on Mondays. It was negative. So I completely eliminated Mondays and only traded the days which actually made profit for me, which meant that from my performance tracking, I knew which days, which sessions, which pairs were the most profitable for me, and then just eliminate the ones which aren't as profitable. So you only take the setups, you only trade the days, you only trade the pairs which make you money from your testing. And you can only find this out from testing, because if it's just all in your mind, like a lot of people say they have a mental journal, you can't look back at 6 months ago on a Tuesday, how you performed, you're not going to remember that. So definitely track every single trade and the process during the trade as well. Yes and no. I kind of have a range. So if I'm trading my personal account, I aim between like 4 or 5 and 10%. So if I make a trade, and let's say I've made 3%, then I'm still happy to continue trading for the month. We could still end the month on 2% or 4% and not reach, the 5 to 10%, but it doesn't matter because as long as the plan has actually been stuck to, then it is completely fine. If I'm making profit, let's say 1 or 2 trades, and I'm actually 5%, 7%, 9%, then I'm going to completely stop trading because I've reached a profit target. There's no point trying to push extra trades to make it 11% or 12%, to make a couple percent extra. I just don't really think it's worth it. So if I make 5 to 10%, I'm completely done for the month.